Get Rich Education is brought to you by Norada Real Estate and Mid-South Home Buyers.
Welcome to Get Rich Education with Keith Weinhold, giving you information and ideas on the investment that has turned more ordinary people into millionaires and billionaires than anything else, and can provide you with more wealth and happiness than you ever thought possible. Now, here's your host, investor, entrepreneur, business owner, and educator, Keith Weinhold.
Welcome to Get Rich Education, show number 52. I'm your host, Keith Weinhold, and I'm back to help you build your wealth. And it has now been one whole year since I began helping you build your wealth with this show. Yes, episode 1 came out October 10th of last year, so this is essentially the 1-year anniversary show. And I have Get Rich Education's John Collins here on the show with me for the very first time to help celebrate for a couple minutes. How much are you worth? We're going to talk about building you by determining your financial net worth right down to the nearest dollar, and you'll discover what that net worth means to you and how you can act to improve it. We've done shows on who you are, we've done shows on where you want to go, and we've done a ton of shows on how to get there, and we're going to focus on locating where you are now on this show. This is the first of a series of Building You shows. We spend most of our shows discussing the delivery conduit, okay? What is going to get you there and how to best get there? At times, we do a show about defining what's at the end of the conduit, at the end of the journey, that is, and, it's kind of answering what does success look like for you. Everyone's got their own definition of that. But there's another element, and that is what's at the beginning of that delivery conduit, okay? So today, that's what we're doing. We're taking stock of where you are now. So, for this 1-year anniversary show, I decided not to do a retrospective of all the past shows, but instead focus on bringing you new material and new value. And I've got to tell you that before I began this show 1 year ago, Get Rich Education, I could have named this anything. It was actually about 2 years ago that I chose the name Get Rich Education. And, it's kind of funny what's happened with me since I chose that name. I've got some friends and relatives in my life that before I did this, they already knew that I invested in real estate. And then they see that I have a show named Get Rich Education. And now they're like, I guess when we get together with Keith, he can afford to pay for all of our meals out now. Okay, I see what he's got going. So Get Rich Education is about building your wealth, but more importantly, Get Rich is about getting and living a rich life. I didn't really want to have the words real estate in the title of the show because over time, I want to keep the flexibility of discussing the topic that will best help you build your wealth. But I can see real estate being a central focus at GRE for, frankly, as far as I can see, because nothing is more historically proven to make an ordinary person wealthy with relatively little effort than real estate. And now someone might say that more people get wealthy in entrepreneurship than they do in real estate. But, I've said that real estate makes more ordinary people wealthy than anything else. Entrepreneurs are not ordinary. That is a lot of hard work. And it definitely isn't passive either, okay? Entrepreneurship, that's active, engaged income. That's not passive income. On a return on time invested basis, real estate investing can be so lucrative because you don't need to draw out your own new roadmap from scratch all by yourself like entrepreneurs often have to do. Real estate investing, that's more of a process in which you can follow in the footsteps of someone whom has already done what you want to do. You can read the book that they've published or listen to this weekly show, and you can follow along in kind of a more connect the dots fashion. How much are you worth? By the end of this show, we're going to determine your net worth down to the last dollar. Now, of course, we can't make any attempt here to determine your genuine worth or value to this planet, or what you're worth to your loved ones, or what your value to your family, friends, and community are, okay? This has got to be more superficial than that. We're discussing your financial net worth here. Your financial net worth is defined as what you own minus what you owe. So let's determine your net worth right now in 3 steps. And then we're going to compare your net worth to other Americans' net worth that are about the same age as you. And you're going to get some other net worth takeaways. Number 1, we're going to determine your assets. Number 2, we're going to determine your liabilities, also known as your debts. And then number 3, the difference in those 2 numbers is your net worth. So number 1, let's determine your assets. Your assets will be written in a column down the left side of a sheet of paper or Microsoft Excel spreadsheet. Just simply write out a list of everything that you own, whether you have debt against it or not. Write down a list of everything you own and assign a dollar value to each one of those assets, and then add up the dollar value of each one, and that's everything you own. List it all out. You might start out listing your home, your primary residence if you own one, and what that would sell for today. Next, you might have a retirement account, whether that's a 401k, IRA, 403b, or a 457 plan. What is the total cash value of that plan today? For many, those 2 right there, your home and your retirement account, they're the 2 most valuable assets you've got. But keep going and list out all of your assets on the left side of the page and what they would sell for, okay? What they're worth, what their market value is. So other items that you might put in your asset column are each one of your investment properties, your car, the current balance of your Scottrade E-Trade stock trading account, the value of your precious metal coins and bullion, the value of all of your checking or savings accounts, CDs, money market funds, cash value of a life insurance plan, collectibles, even the value of the furniture in your home, really, okay? Not what you bought it for or not what its book value is, but, what it would really sell for. You have a dollar value assigned to each one, and you'll add them all up and write that total in the bottom of the assets column, okay? That was step 1, determining your total assets value, which is on the left side of the page. Step 2 out of 3 is determining your liabilities. Go ahead and write these in a column to the right of the assets column, but not quite all the way at the far right. And just the same, what you're going to do is write in the name of each debt that you have and the debt amount of each of your individual liabilities. That might be mortgage loan balances, student loan debt, car loans, credit card debt, personal lines of credit, any debt amount that you might owe to a family member, as well. Every one of those will get its own line. Now, if it's a mortgage loan or a car loan, go ahead and place that debt amount on the row directly across from that asset that you wrote in the first column, okay? Add up the value of all of those debts in your debt column and write that total amount at the bottom of the debt column. That was step 2. Step 3 is simply taking the total value of all your assets, subtracting it from the total value of all of your debts, and at the bottom page, write in what that number is. Yes, all those assets minus all of those debts, that equals your financial net worth. If your assets are greater than your debts, you're going to have a positive net worth number, okay? If your assets are exceeded by your debts, that's a negative number, and you have a negative net worth. Another way to think of your net worth is what you would have left over if you sold everything that you own and paid off every debt that you owe. Well, hopefully you have a positive net worth, but your net worth might be negative, and if it is, you're actually very likely to turn that around because you listen to this show. Sometimes you might hear a net worth worksheet referred to as a balance sheet. Okay, they're the same thing. Now, if your net worth, if that totaled up to $2 million or more, you are a multi-millionaire. If it's $1 million or more, you're a millionaire. If your net worth is $100,000, you're a 100,000aire. I just kind of made that term up. If your net worth, not including the equity in your home, is $1 million or more, you're now an accredited investor. That's what the SEC, the Securities and Exchange Commission, says is the bar for an accredited investor. That basically allows you to participate in certain private equity investments in syndications that just are not available to the general public, okay? Now, whenever you fill out a uniform residential loan application for rental property or for your own home when you go to get a mortgage, you basically do need to write out a net worth statement in that little exercise that they have you do on the loan application. So sometimes Robert Kiyosaki's cash flow board game is the first place where one gets experience in building a balance sheet, aka a net worth worksheet. Now, when most people first learn about the net worth calculation, they often want to start logging into accounts to calculate theirs right away. And that's fine. It's kind of a cool thing to do. And it is worth finding out, okay? Because there's more to this exercise that you can infer than just some nice to know information. Besides what I've just mentioned, you can compare your net worth at your age to those of other Americans. And if you've been a real estate investor for any considerable length of time, you're probably doing pretty well net worth-wise. So you might find some of these numbers I'm about to give you as almost shocking, okay? And that's shocking in a good way because you're going to be so far ahead of what these figures are. This is the median net worth of Americans, and this is according to Motley Fool. This is kind of age graded. They put these in age groups. Not exactly sure why, but if you're less than 35 years of age, the median net worth, meaning half the people have a greater net worth than this figure and half the people have less of a net worth than this figure. If you're less than 35 years old, that net worth figure, and I'm just rounding to the nearest $1,000 on all these figures, is $7,000. Shockingly low. If you're 35 to 44 years old, and I'm just going to go ahead and kind of take the middle value of these numbers, I'm going to call that 40 years old, your net worth, and this includes equity in your home and everything else, 40 years old, $35,000. Age 50, it only goes up to $85,000. Age 60, $144,000. Age 65, 69, the late 60s, it is $194,000. And it actually goes down from there because that's when a lot of people are in retirement. Yeah, that's it. Now, that's net worth with age as a factor. Let's look at net worth without age as a factor. Okay, let's look at the net worth of the top 10% of Americans. And this is household net worth in this case. Okay, previously, I believe that just referred to individuals. This is household net worth. The net worth figure that puts you in the top 10% is $780,000. There's a household net worth of $780K. Your household's in the top 10% of Americans, okay? For the top 5%, in order to be there, that figure is basically doubled. It's $1.5 million. That's the top 5%. Now that you've built your financial net worth worksheet, which is a bit like your financial snapshot, this is kind of like your game board now, or like your chess board. You can go ahead and look at these pieces and see how they're positioned, and you might get some insights, and you might decide that you want to add a position or abandon a position just based on what you're seeing on this sheet now. Well, when we come back, we're going to look over it together, and I'm going to give you some actionable insights on how to improve your net worth. We're also going to hear from Get Rich Education's John Collins for a few minutes on the importance of a net worth worksheet, also known as a balance sheet. Now, John, from being valedictorian of his high school class to winning the state's most grueling day-long mountain running race, okay, and I'm not just talking about the 30 to 39 age group, but winning the entire event, and being a big thinker himself, John has also been featured as a guest on the Real Estate Guys radio show and in the Elevation Group's entrepreneurship video series. You're going to hear from John next. Cash flow real estate investors nationwide and worldwide, this is Get Rich Education's Keith Weinhold. Forbes has rated Memphis, Tennessee as the #1 cash flowing market in the world. Our good friends at Mid-South Homebuyers have been Memphis's premier turnkey real estate provider for 14 years with a stellar reputation and an A+ rating with the Better Business Bureau. Owner Terry Kerr was born and raised in Memphis. Yeah, he knows the market and has renovated and sold over 1,000 houses in the Memphis area. Find out what their many repeat buyers already know. Their houses are completely renovated, even come with a 1-year builder's warranty and a lifelong rental guarantee. They're a perfect fit for the first-time out-of-state investor or the seasoned investor diversifying their portfolio. Mid-South Homebuyers' friendly staff makes investing easy. Learn more at midsouthhomebuyers.com or give them a call at 901-217-HOME.
Are you having a hard time finding great investment properties? Unfortunately, the best deals are rarely found locally. Successful investing begins with the right properties in the right markets. Norada Real Estate provides everything you need to invest in the best deals across the U.S. Our simple, proven system will help you create real wealth and passive monthly cash flow. Get your free copy of the ultimate guide to passive real estate investing at noradarealestate.com/guide. That's NORADA realestate.com/guide.
This is Rich Dad Advisor Ken McElroy. Listen to Get Rich Education with Keith Weinhold and don't quit your daydream.
Welcome back to Get Rich Education. Yeah, I'd like to welcome in John Collins.
Hey, Keith. Thanks a lot. It's great to be here, and happy anniversary here on the 1-year anniversary of GRE. That's awesome.
It's kind of hard to believe that 52 weeks, 52 episodes. What have you been up to lately, John?
Well, actually, Keith, I've been really actively managing my financial statements, both my balance sheet and my cash flow statement, which as an investor, it's something you really need to do pretty regularly. And if you don't, you'll definitely pay the price for it. So yeah, I just kind of been cleaning house and managing the paper.
Yeah, I think sometimes the clarity of a net worth worksheet might show someone that they're out of balance. But another thing it might show them is that they're thinly invested in way too many different investments. And, a lot of times that can create some administrative drag in the investor's life.
That's absolutely correct. And I think the really interesting part about the financial statements is that they're very dynamic. They're kind of like living statements. And they're not the most visual. They're very, kind of analytical and number driven. But if you can get where you can read a financial statement and understand that the story that they're painting, the story they're telling, you can kind of see how things are changing and you can look into the future and make good decisions going forward.
Now, I got to admit, I've only played the cash flow board game, Robert Kiyosaki's board game, one time, but I think you've gotten quite a few more insights from it than I have.
Yeah, actually, the cash flow board game by Robert Kiyosaki, that was probably the #1 tool that got me started in investing and really got my head in the right place. Is a great tool to understand and learn the fundamentals of the balance sheet and the income statement. Pretty much the whole game is played on those. And as you're playing the game, you just see how the numbers move through those different sheets. You see how your different investments affect those balance sheets and the income statement. And it's just a really good tool to learn how these two work together. And then you can kind of do your own real life income statement and balance sheet and then see how that compares to the game board. And then you can kind of start looking for opportunities in real life where you can really make some changes and see some of that occurring on your own statements.
So in the cash flow board game, what keeps one from getting out of the rat race? What are some of those bad decisions that keep one from being financially free? And then do those translate into life?
Well, I think the biggest bad decision is just not doing anything, being afraid to pull the pin on something, and you can sit there and go round and round in the rat race and wait for that perfect card or the perfect deal or whatever. And I think you just got to start putting some money out there and make things happen. And honestly, the best games I played are the ones where I was pretty much just doing whatever, like doing, as much as I could, just taking a lot of action, like, good quality action, but being really active, I guess, and dynamic is where I got the best results.
Hey, John, it's been great having you on. And I'm really going to wish you well here. You're about to go off to the Genius Network event where you're going to be in the same room as some of the big names and rubbing shoulders with Tony Robbins and Peter Diamandis, Tim Ferriss, and some of those others. So, I really hope you have a totally enriching time over there.
Awesome. Well, thanks a lot, Keith. It was great to be on the show, and we'll check in again soon.
Now, there are automated programs that can help you calculate your net worth for you, like Mint.com. Mint links to your bank accounts, brokerage, mortgage, and other accounts, and automatically updates a lot of this for you daily. Now, I'm a big fan, though, of you building your own Microsoft Excel spreadsheet and updating it quarterly or even monthly if you're really into it. That way you can see how your net worth is growing over time. You're going to see what progress looks like. So let's get looking at your worksheet right now, like you've got it out there in front of you. Let's look at how much savings or liquidity you have as a percentage of your assets, okay? What do you feel comfortable with? Is your liquidity 20% of your assets, or is it 20% of your net worth? If it is, how do you feel about that? Are you sure that it's not too high? Because where you're liquid in something like a checking or a money market account, that's probably where you're not earning a return. You have to ask yourself if you want to consider your precious metal bullion as part of your liquid assets. Gold and silver are highly liquid, but there are transaction costs associated with buying and selling it. So when considering how much liquidity you desire, remember that you probably have property insurance on your rentals that can kick in the event of a calamity or a natural disaster. A rule of thumb is that about 4% of the value of your real estate portfolio is maintained as liquidity, okay? So if you have real estate valued at a total of $1 million, we're talking about $40K of liquidity. If you're trying to come up with a down payment for a new property, that might temporarily give you a greater liquidity accumulation on your balance sheet, okay? It's probably going to exceed that 4% while you're accumulating a down payment. Now, notice I didn't use the word savings in there. If you're trying to accumulate a down payment for a turnkey rental property, for example, rather than say that you're saving money for something, I don't really care for that. That sort of iterates a scarce mindset. I think it's better, it's more constructive for you to say instead that you want to get liquid. You need to get liquid for another rental property. Get liquid, it's just kind of more of an abundant phrasing than I need to save money. Saving money, that reinforces scarcity. Just like $20,000, rather than saying 20 grand, say 20K. It sounds a bit more abundant. Now, on the debt side of your worksheet, here's something important I want you to do. Write in the interest rate that you're paying on each of those individual debts, right next to the debt name in parentheses, okay? That's going to be really clear. That's going to be more transparent to you. So now you're getting a better picture of not only how much debt you have, but proportionally how much of it is at a low interest rate, how much of it's at a higher interest rate. And now you can be more targeted on how you address your debt. And you know what? Whenever I take on a coaching client on the debt side of the net worth worksheet, I can hardly believe how often my student they have this desire to buy some income real estate, but they have trouble coming up with a down payment, partly because they have credit cards with interest rates of 15, 18%, and they're making the monthly minimum payment on that and just sometimes struggling to keep up with those, okay? And that same student of mine paying 15 to 18% on credit cards, they're often receiving these 0% APR credit card balance transfer offers in the mail, and they receive them from major national banks like Chase or Citi. And what that person often does is they just throw those offers into the recycle bin or into the trash can. In fact, that's often the first major place where I identify that one can strengthen up their net worth worksheet and their personal cash flow by transferring those balances onto 0% APR cards. Now, you might pay a 3% balance transfer fee. That's a pretty common number, 3%. If you move, say, $10K from a 15% APR card to a 0% card for 12 months. So that 3% that you've got to pay up front, that's $300. $300 on a $10,000 balance. But that's effectively just a 3% interest rate that you're paying up front over 12 months, which is way less interest than if you're paying 15% or $1,500 over those 12 months, okay? What you did there is you just made an easy arbitrage play. And just one word of warning, you probably don't want to move credit card balances around if you're like in the process of qualifying for a mortgage, because those balance transfers might spur the credit agencies to do inquiries, and that could put a short-term little chink in your credit score there. But yeah, I can just never understand why most people that are paying high interest rates on credit cards just see those 0% APR credit card offers in the mail for balance transfers and just summarily throw those away, okay? Now, one valuable way to use your net worth worksheet is to help clarify how leverage is magnifying your returns when you buy income property with a loan. Let's say that you just bought a $100K cash flowing rental property with 20% down. How's that look on your net worth worksheet? On the left side of your worksheet, you have a $100,000 asset. To the right, in your debt column, you have $80K of debt against it. And remember, I said that you don't quite want to have your debt column written on the far right. On the far right, you'll have your equity position, which is $20K. So on the left, you have a $100,000 asset minus that debt in the middle of $80K equals your equity over on the right, $20K. Now, with the passage of 3 years' time at historic real estate appreciation rates, you'll now have $120K of equity on the left, all right? Your $100K going to $120K at a rate of return of just 6% or so per year. So now, after 3 years on the left, you've got $120K. In the middle, rather than $80K of debt, it's down to $78K because your tenants paid it down for you. And over on the right, that leaves you with $42K of equity after 3 years. Now, how did that happen? In just 3 years' time, your equity position went from $20K up to $42K. It more than doubled. That is because of the power of leverage with a little extra help from having your tenant pay down a little piece of that mortgage principal for you too, okay? Yes, your equity position more than doubled over just 3 years. And that doesn't even include the cash flow or any of the other benefits that the real estate gives you. And of course, we don't count on this appreciation happening. We buy based on cash flow, not a hope for appreciation. Okay, cash flow is more predictable than appreciation, and we buy for cash flow, and we do it in sustainable markets. What I just described there with appreciation, that's just what historically happens over time. Okay, the value of your property could fall. There is risk here, of course, and always. So real estate is kind of this game of attrition. The longer that you hang in there and deal with any of these short-term blips like some vacancies or some other losses, the longer you hang in there, the more likely you are to be a long-term beneficiary of real estate wealth. So it's not like we're trying to eliminate those debts on the debt side of our balance sheet. It's just managing those debts. So we typically want to keep some of this good low interest fixed rate debt in place to create that leverage, which creates those great returns historically that I just described. Being financially free is far more powerful than being debt free. Another way to use your net worth worksheet is to populate the formulas in the cells such that you can tell how much equity you have in different markets. Let's say you own 6 properties. Let's say you've got 2 in Atlanta, 2 in Indianapolis, and 2 in Birmingham, Alabama. That's great. That looks like you've got some good geographic diversification there. But if you look at the total amount of real estate equity in your portfolio, now that you have this clarity of the net worth worksheet, you can start to tell, oh, wait, even though I'm spread in 3 different markets with 2 properties in each one of those, I've still got 50% of my personal real estate equity in Atlanta and just 25% in each of those other two markets. And you might not want to leave too much equity exposed in any one market. So now you have that clarity and you can reposition as you like. So there are just so many different scenarios that you can plot out and directions that you can get when you lay it all out on a net worth worksheet. Assets on the left, liabilities in the middle, put your property equity over on the far right, all right? So seeing all of your invested positions laid out, it kind of also helps you practice what's called zero-based thinking or a QWINK analysis, K-W-I-N-K, QWINK. Knowing what I now know, would I get into this investment again? Okay, that's kind of an acronym I learned from Brian Tracy, the QWINK analysis. You can really see if you have any losers or laggards in your portfolio over time as you update this. We've talked a lot about the conduit and how you need to get there. And part of your conduit's trajectory is finding out where you are now. And one thing you notice with these net worth worksheets is you think about your peers and you think about your family. Long ago, decades or really generations ago, there was typically this wealth gap between different families, but now there's more of a wealth gap within families. You might have siblings a lot less likely to accumulate wealth as you, so you can kind of do your own thing, and you're really going to get that clarity now that you put this together. You're going to live a limited life if you try to pay off all your debt, save money, and invest in the buy and hold stock market. That typically just confines you into a life with boundaries. Hey, go to GetRichEducation.com to sign up for our free wealth building newsletter. While you're signing up for the newsletter, be sure to visit our About Us page. While you're there on the site, there is a photo of that first fourplex that I ever bought and resided in back in 2002. There's even an image there on our About Us page of the cashier's check you can see there. It's that same $12,000, which represents the 3.5% down payment plus closing costs that I made on that fourplex building. There's even a photo of GRE's John Collins there on the About Us page. And another great new tool that you'll see at GetRichEducation.com is the SpeakPipe app. You can use that to leave us a voicemail. If you would like to hear your voice on the show, just go ahead and click on that app over on the right of the page. I think it says send voicemail over there. It's pretty clear to see and easy to use. If you have a comment or a question, go ahead and leave it there. And I think if you have a question that applies to enough of the audience, I'll go ahead and play your voice and your question on the air and answer it for everybody. I'm here to help you build your wealth, and with the financial net worth worksheet, that's part of it. That's knowing how you're growing or how you're not growing. But there's another important element of this that we'll discuss next week. But the important thing to remember is don't ever measure your life progress only in terms of financial net worth, but how rich you are in love, rich in place, rich in choice, and rich in the lives of others. I want you to be rich in all of the things that matter. Now go out there and don't quit your daydream.
You've been listening to Get Rich Education, telling you what the wealthy won't tell you about real estate and investing. If you enjoyed the show, please take a minute to visit iTunes and leave your comments.
Nothing on this show should be considered specific, personal, or professional advice. Please consult an appropriate tax, legal, real estate, financial, or business professional for individualized advice. Opinions of guests are their own. Information is not guaranteed. All investment strategies have the potential for profit or loss. The host is operating on behalf of Get Rich Education, LLC exclusively.